Hello everybody, welcome to my channel. My name is Tuf, and today we'll be talking about Geodrill, GEO on the TSX market in Canada. I've been already covering this company in 2022, still believing there was like a huge upside. However, the story changed a little bit. They had to escape one country because of the political instability, which was Burkina Faso, which made a small, let's say, dip in the revenues for the last few quarters, and now the story will start growing again. So that's why I want to make a quick update, because there's been like a few interviews from Dave Harper, the CEO, on YouTube, and it's comforting really the idea that for me this stock is likely to go higher. So quickly here to show the chart, I put the share price and also the net income for the last few years. And as you can see, the net incomes have been growing steadily. So it's a little bit cyclical because there's a wet season and there's a dry season where they can drill a little bit more. But overall, there was like a really steadily increase of the net income, which is really determining the direction of the share price. And obviously, it was following, however, for the last 3 quarters, as I mentioned, the escape from Burkina Faso and the redeployment of the drilling rigs on overseas, especially in South America, that took some time, made also the share price dip a little bit, but basically from 3.3 Canadian dollars to 1.7. So it's almost like a 50% loss. Since then, it's been already returned a little bit to profitability. Q1 2024, we'll see. They signed also a few contracts. I will give more details, and also they are focusing now on major miners rather than juniors that sometimes don't pay properly. So the stock has recovered, however, is not at the levels of 2022, and obviously now, as we will see, the number of rigs that they have at the moment is 89 rigs, compared to, let's say, 75 when it was 2022, which was their best year. So why do we have more rigs sometimes over year, but not necessarily higher revenues? Is because simply of the component of utilization. So a rig sometimes is mobilized, is being used, and sometimes is in travel mode or being immobilized or being repaired. Recently, on the few interviews that I've seen on Radius Research and another one on Sequire, Dave Harper, the CEO, mentioned definitely so these 89 rigs. So a few have been recently acquired, but also the utilization, which is 75%, which is the top that they can ever have, because 25% usually are in maintenance or transportation. So this is very good for the future, basically, to understand how much revenue we can expect for 2024, as there is no real guidance. Okay. So this is an extract of the Q1 2024 press release. So just the last quarter that they reported a few months ago. And really what is striking here is the amount of contract that they secured just in a single quarter, which was $150 million USD. So just to give an approximative idea of the annual revenues, it's 130 million max, like the max was in 2022, over 138. So basically they got a full year of contracts, a little bit more just in the first quarter, which is like fantastic. And also the quality of this contract is basically with tier 1 mining companies, making them more sure like that the receivable that they put in the balance sheet will be also converted into cash. They mentioned also like the strong presence in Egypt. Gold price obviously still very high, but it's not only about gold, it's about silver, it's about copper. So any metal that it can be drilled, any soil that can be drilled, they will do it. So now let's go to the DNA card. DNA card is really where you consolidate all the metrics and where you can have a overview of this company. To me, this company is very interesting. So why? Let's start with the market cap. So here I am in US dollars. So I converted the Canadian dollars of $2.3 today to 1.7 USD. So the market cap is $80 million. All right. In terms of revenue, so you could see that the last 3 quarters were like going down they were losing money in terms of net income. This is what you see in yellow. For 2 quarters, they were like, but not profitable, which was absolutely unexpected. But because of this, let's say, moving from Burkina Faso to other countries, the utilization of their rigs was completely lower, and then definitely it impacted the margins. So you could see they had like minus 10% the net income, here minus 4. But then on Q1, already we see a huge improvement. They are back to profitability, and the net income margin 6% is not the best I've seen. They've been already up to 12%, but it's definitely a recovery, and it's expected to be better for the next few quarters. In terms of balance sheet, so this is here where you can see the working capital. So this is basically the sum of like the assets minus the sum of the current liabilities. And here we have a working capital of $15 million. So overall, when you see the enterprise value, it's like the market cap minus the working capital, and it gives you like a really low enterprise value. Here, just to mention, I don't even mention about the plant property and equipment, which is 65 million USD, which is huge, but I don't consider it in the, otherwise the enterprise value will be negative. All right. So just for this $2 million on the quarter, if you multiply by 4, obviously it's going to give you like $8 million of net income, and it's equivalent to a 25% yield. So it's extremely huge, and I think people just don't realize the power, like I mean the yield of this company. I mentioned that they don't have any long-term debt, so that's really good. And also here is to see the operating leverage. So here's our gross profits. And here's like the OPEX basically. OPEX and here CAPEX. And you can see that, of course, this 2022 and 2023 were a little bit down. But if there was no issue with this Burkina Faso where they had to escape the country, demobilize their rigs, definitely the operating leverage would have been fantastic. So let's hope that they go back to this 2022 let's say mark, which actually was the let's say the little hint given by Dave Harper on this interview with Radius Research. So he was saying basically he was not giving any guidance. However, the short-term medium goal is to achieve similar profitability as 2022 and then grow from there. So 2022 is going to be $138 million. And this is from there that we can start building like a price target, considering a special PE and some assumption. So this is what I'm going to do it on the next one. So here, this is the 2022 valuation that I made in the past. So I will just skip this one. Okay. There was another one with a different PE. So I considered like a net income at 13% and a revenue of $130 million. But now I changed a little bit. So now this is the valuation from 2024. So the expected revenue, I think it's going to be around 135 million USD. USD. And net margin, when you look at this quarter, Q1, they had 6% net income, and the next quarters will be even better. So that's why I consider a slight increase in the net income overall from 6% to 8%. And that's giving like approximately $10.8 million of net income that you divide by the number of shares, approximately 50 million. And it's going to give you an EPS of 0.22 cents. And I consider a very basic PE of 10. The company, if it's growing 10% year over year, even though it's not really accurate because the revenue is not necessarily the net income increase. But anyway, I consider a PE of 10, and it's going to give you a share price of $2.2 just based on the net income. Then after, you need to add the working capital per share. So it's not really the cash, but it's just to give like an idea of, okay, how much cash they have. And I didn't even consider the plant property, but basically out of 50 million shares, they have $40 million. So it's an equivalent of $0.8 that you could add to the valuation. So our final share price is just the sum of both share price, PE rate, based estimation, plus the working capital per share, which give you $3. 3.0 USD in Canadian dollars, which is actually the right currency that we use would be 4.1 Canadian dollars, which is 70% higher than today's price. I wanted to also give a very interesting point, data point for the industry. So I tracked the gold price against the oil price, and then I made the this trend. And then you can see that from 2022, well, actually, there was like one of the best years. From 2022, the gold to oil ratio was 15, and now it's like about 30. Basically, it doubled, meaning that a miner, when I want to extract gold, the main, let's say, OPEX for a miner is really the oil. So if you now can sell your product twice more than what you have to spend, the miners definitely will just expand. And the more you have, the miners you have, the more drilling you need, because you need to replenish the resources that you're already drilling. So it's like a recurring revenue for Geodrill that will never stop growing if this trend keeps on getting higher and higher. But this is definitely a very interesting trend to look at. So in conclusion, back to profitability since Q1 2024. Now the number of rigs increased definitely, like not exponentially, but very, very dramatically to 89 rigs. Their utilization, I say, is very strong at 75%, which is one of the strongest in the mining industry. As Dave Harper, the CEO, mentioned, the short medium-term goal is to do as good as 2022 in terms of profitability, and you will likely see the results showing up in the next quarter, which will be in November. So Q2 will be in August, in a few days, I think, but Q3 definitely will be the highlights. I want to make this video before the Q2 because definitely there will be some more hints, and I prefer to inform people before the fire takes. Anyway, the CEO also has skin in the game, a lot of shares. He owns almost half of the company. So, when this CEO talks, when he comes back to interviews, this means that usually he's got some good news. He used to stop making interviews in 2023 because of these issues with Burkina Faso, but now he's back to the media, and I think it's a really good point to see him. They also have like a buyback program. I don't know where they are exactly here, but that was from 2022. I don't know what they did with it. Gold, copper price, metal price, everything is on the highs. So definitely this is something that when I was mentioning the gold oil ratio, this is similar information, but this is definitely helping the miners to develop. West Africa also has been recently expanding in Senegal. They keep on expanding in Egypt and also South America in Chile and Peru. One of the highlights also that I heard during these interviews is their long-term growth is now that they have these kind of contracts with the major miners, they'll be able to have a much better visibility. And then when the CEO says like we have good visibility for 3 to 4 years, and then we continue to put on growth like this, it means that there's a very, let's say, assurance that the company will do great for the next few years, not only just for 1 or 2 quarters, but like for the few next years, which is exactly what you want. Again, gold to oil ratio in favor of drilling. Konza just did not remove them, but anyway, as oil price could change a little bit, we could have also low P ratios for mining companies, and also always the supply chain impacts is not as bad as it used to be. So I could delete this one, but I keep it as a point here. Anyway, I hope you enjoyed this video. It's just to give an update before the Q2, and maybe if anything is interesting, I'll do another video. Thank you and have a good day.